In this week's Bizline, Vietnam's economy remains resilient amid weakening global demand. And later on, SBV continues ongoing Treasury bill issuance. Hello there and welcome to Bizline, our weekly economic journal on VTV International. I'm HàNG. And as usual, we'll now look at news making headlines in Vietnam's economic scene this week.
According to the Asian Development Outlook report by the Asian Development Bank, ADB, Vietnam's economy remains strong and is expected to recover quickly in the near future. A weak external environment has had a negative impact on Vietnam's export-oriented manufacturing sector and industrial production. However, the economy has shown resilience and is poised for a swift recovery. This is attributed to strong domestic consumption, supported by moderate inflation, accelerated disbursement of public investment, and improved commercial activities. The services sector is expected to expand due to the revival of the tourism industry, while the agriculture sector is projected to grow by 3.2% in 2023 and subsequent years, driven by rising food prices. Standard Chartered also forecasts Vietnam's GDP growth to be 5.1% in Q3, up from 4.1% in the previous quarter. Trade data has improved consistently every month since the beginning of the year, thereby highlighting the clearer recovery ahead in the second half of the year.
Foreign investment capital in Vietnam continues to increase, reaching nearly $20.21 billion in the past 9 months, which is a 7.7% increase compared to the same period last year. This data was announced by the Foreign Investment Agency of the Ministry of Planning and Investment. Out of this total, 2,254 new investment projects have been granted investment registration certificates with a combined registered capital exceeding $10.23 billion. This represents a significant increase of 43.6% compared to the same period. The new investment projects primarily focus on provinces and cities that have a favorable environment for attracting foreign investments, such as Hanoi, Hải Phòng, Ho Chi Minh City, Bắc Giang, and Bình Dương. These locations are known for their good infrastructure, stable human resources, efforts to streamline administrative procedures, and active investment promotion activities. Vietnam currently accounts for over 10% of the imported chips in the US. In terms of sales, Vietnam ranks third in Asia, following Malaysia and Taiwan, China, for exporting semiconductor chips to the market. Despite their small size, chips can make up to 30% of the cost of certain devices, such as smartphones. As a result, the semiconductor industry is projected to surpass $600 billion in growth in 2023. By 2029, it is estimated that the market's total value could double and reach $1.4 trillion.
Vietnam's international aviation market has gradually recovered in the first 9 months with increased numbers of foreign passengers. This is according to the Vietnam Civil Aviation Authority. Their statistics show that airports across the country welcomed 89 million passengers, including 23.7 million foreigners, up 20% and 266.8% year-on-year, respectively. The number of international visitors almost tripled the target for the entire year, which is 8.8 million. The international air transport market maintains its recovery momentum for most traditional markets, excluding China and Russia. It has recorded the entry of some new markets in Central Asia, such as Kazakhstan, Uzbekistan, and Turkmenistan. Experts say the recovery of foreign passenger throughput is due to the open-door policies of countries, especially those in Northeast Asia. The total revenue so far this year is estimated to be nearly $21.9 million. Vietnam's tourism industry still has the capacity to welcome 12 to 13 million international visitors by the end of the year.
Those are some highlights from Vietnam's economic scene. Up next in our crosstalk, we will take a look at impacts of the State Bank of Vietnam's issuance of treasury bills in recent times to the economy.
Currently, Vietnam is under great exchange rate pressure, with exchange rates continuously increasing, including the USD buying and selling rates of the State Bank and the USD exchange rates of commercial banks as well as the free USD exchange rates. Because the interest rate difference of the entire interbank market is only about 1 to 2% and the USD interest rate is about 5%, it shows that the interbank market may be holding a lot of USD, putting pressure on the exchange rate. The best way to reduce pressure is for the central bank to withdraw money from this market. However, for investors trading in the stock market, this information greatly affects investor psychology. Some people believe that the stock market is reacting negatively to the news of the withdrawal of bills and the VN index has dropped sharply. Meanwhile, pumping and withdrawing money is a very common activity of the central bank, and this year, Vietnam will prioritize GDP growth, so the issue to monitor is GDP growth in this third quarter.
Now, the State Bank of Vietnam has been consistently issuing treasury bills in recent times. Economic experts have noted that this is happening as overnight interest rates in the interbank market have dropped to their lowest level in 2 months. To gain a deeper understanding of the situation, we invited to our studio economist Dr. TIểto further discuss this session. Well, thank you so much for being here with us. Now, first of all, what do you think is the meaning behind the State Bank continuous issuing of treasury bills in the past week?
First, if the State Bank of Vietnam issues treasury bills and sell the treasury bills to the public, and the public buy the treasury bills, then the money comes from the public to the State Bank. If the State Bank is selling the bills, that will have an impact on all the sectors of the economy, and particularly stock market. Normally, if you and I, we have a lot of money, the liquidity is good, then we have a tendency of buying and selling stock. And with that, the stock increase, and that will be manifested in the VN index. But you have seen in the last few days, the VN index is going down. That means there is less the transactions going on.
From the perspective of the State Bank of Vietnam, in the coming time SBV will do both tasks at the same time. On the one hand, absorbing market liquidity to reduce the pressure on exchange rate speculation of commercial banks in the short term. The amount of withdrawal is just enough to initially balance the exchange rate and not cause liquidity stress on the interbank. At the same time, the SBV continues to promulgate policies to help market interest rates decrease and credit open up. This action by SBV may last until the end of the year before there are new signs for the economy. SSI Research also believes that the state bank's move to issue T-bills can be seen as a way to adjust the short-term liquidity situation in the system and is a common activity from central banks, and does not mean State Bank has reversed its monetary policy.
Now, like you mentioned earlier, the treasury bills obviously will have impact on the stock market. So what do you think are the impacts in the short, medium and long term?
I believe that there's only on a short-term basis, because the State Bank of Vietnam, while issuing the bonds and absorbing some money from the public, there is some impact on the stock market. But there is also impact on the foreign exchange market, and that works that way. If there is less liquidity in the market, and the people also have less money to perform transaction with foreign exchange. You can imagine if I have a lot of money, I can buy stock, I can buy foreign exchange, I can buy real estate and so on. But if I have less liquidity, and I will not stop buying and selling things, but my transactions will also limited. So that has also the impact on the foreign exchange. Now with the foreign exchange, we have seen in the last few days, the foreign exchange, the Vietnam is down value compared to the US dollars has increased. And that may cause some concern, because if the Vietnamese đồng foreign exchange increase to a very higher level, right now is at about 24,500 đồng a dollar. But there is a possibility that we will go up higher and higher. If that goes up to 25,000 Vietnamese đồng a dollar, then that might cause a lot of problem for the economy. Number one, because of the import, and we have to pay imports by the dollars. So if the dollars value increase compared to the Vietnamese đồng, or otherwise the Vietnamese đồng foreign exchange value increase, then we have to pay more for the imports good, and that will impact, that may impact inflation in the country. And that is the way why the State Bank of Vietnam issuing the bonds. So there are two purposes for that. Number one, to keep the foreign exchange value of the Vietnamese đồng on hold. And number two, to regulate the money supply.
What do you think are the most immediate impacts to the stock market that we can anticipate?
That has a major impact on the stock market. But on the other hand, that gives the State Bank of Vietnam the free hand to regulate the foreign exchange. Going back to your question about whether it's a short term, medium term, or long term, I think it's only short term. Medium term and long term, State Bank of Vietnam has many other monetary policy instruments to regulate the market. So what we are seeing right now is just on a short-term basis, or that probably that's the reaction of the State Bank of Vietnam to the current situation, and particularly that has to do with the Federal Reserve Bank attitude toward the interest rates. And as you know, Fed still want to keep a control on the inflation. Fed still believes that there's still a long way to achieve the 2% inflation rate. So they continue to have a tightening monetary policy, and they keep the rates high. In that case, because of the rates in the States are high and our interbank rate is low, the differential is about 5%. With that interest rate differential, that has an impact on our Vietnamese đồng. And with that, the State Bank of Vietnam has to control the increase of the foreign exchange rate.
The VND is facing significant pressure as the DXY index, a measure of the strength of the US dollar against a basket of 6 major currencies, has risen for the 10th consecutive week, marking the longest upward trend in recent years. Economists and experts said actions taken by the US Federal Reserve, including raising interest rates and US government bond yields, are contributing factors to a rising DXY index, which has reached 106 points, the highest level in the last 6 months.
Và nếu mà xét về bức tranh chung của nền kinh tế Việt Nam và cũng như là tiền đồng Việt Nam, thì chúng tôi vẫn kỳ vọng về xu hướng tăng giá nhẹ của đồng Việt Nam so đồng đô trong tương lai.
The flexibility in operating monetary policy of the state bank in the last year has kept the dollar exchange rate relatively stable with only 4% fluctuation. Meanwhile, the exchange rate between the US dollar and currencies in other major economies fluctuated by several percentage points.
Chính sách của Fed nó đã dần đi đến hồi kết, và nhiều người đang kỳ vọng là Fed sẽ bắt đầu giảm lãi suất trong năm nay. Thì dự báo chúng tôi là cái áp lực tỷ giá năm nay nó sẽ ít hơn năm ngoái.
Our house views that the Vietnamese dong will finish the year at around 23,600 to US dollar. I do not think the Vietnamese government wants to see too much appreciation in the Vietnamese dong when export volumes are coming down.
The US dollar rates remain almost unchanged in Vietnam. According to economists, if another round of interest increase was to take place in November, as announced by the Fed, fluctuation would likely be insignificant as the market would have had enough time to prepare.
Now, you've mentioned a little bit about the interest rate. So will this measure help stimulate credit growth in Vietnam, in your opinion?
The rate, if it's too low, and that may encourage the people to borrow the money and invest into something very speculative. So there is some kind of bottom line that the State Bank of Vietnam have to be considered. The State Bank of Vietnam wants to lower the interest rate in the future, but if Fed continue to rise the interest rate over there, then probably the State Bank of Vietnam may reconsider the tightening monetary policy.
Do you think it's a sign that for a potential interest rate increase in the future?
It depends. Number one, if the State Bank of Vietnam control the foreign exchange rate very well, so keep it at level of $24,500 down a dollar. And number two, it does not cause a turmoil, a lot of volatility in the stock market. Then I believe the State Bank of Vietnam will lower interest rate one more time.
What do you think would be feasible?
5.5% is more reasonable, taking into account that so far for the first 6 months we grow only at 3.72%, and we have only 3 more months to finish the year. And at this time, the economy continues to be sluggish, in my view. The number of companies that close down or go into the bankruptcy or cease to operate continue to be at a higher rate. Roughly on a monthly basis, 15,000 companies, including small companies, go out of business as compared to 10,000 of last year. So with that, I don't see, to be very frank to you, I don't see the recovery of the economy this year yet. From now until the end of the year, the economy may improve some way, but to make up the sluggishness for the whole year, no way. So I believe the growth rate may be at 5.5.
In total, in 7 sessions, the State Bank issued Treasury bills with a total scale of nearly 93,800 billion VND, thereby withdrawing a corresponding amount of money from the market. These Treasury bills all have a term of 28 days and are offered for sale by interest rate bidding method. With the above term, the issued Treasury bills will mature from October 19th to October 27th. Accordingly, the amount of VND that has been withdrawn will also return to the market in just the next 2 to 3 weeks. In fact, bill issuance is a normal and basic operation of the central bank. In Vietnam, in the period 2018 to 2023, the State Bank has performed this operation regularly many times a year. At the current stage, the net withdrawal tool through the T-bill channel is likely to be the main tool used by the State Bank to regulate the market, so the net absorption volume will likely continue to increase until interbank interest rates increased again and the exchange rate was somewhat adjusted more stably.
Now, does the possibility of Fed raising interest rate again before the end of this year will impact Vietnam's financial market, and will it compel the State Bank to return to its tightening monetary policy, in your opinion?
Of course, there is no guarantee that the State Bank of Vietnam will change the course of action and going back to the tightening monetary policy. They may continue to have an easing monetary policy throughout the year until the end of the year. But I think the probability of continuing the way of easing monetary policy, I believe the probability is less than going back to returning to the tightening policy, if the situation getting first the interest rate differential is going wider and wider, and that impact the stock market, that impact the foreign exchange market, and that impact for sure the import and export market. If there is many unfavorable results of the tightening monetary policy, then it is likely that State Bank of Vietnam will stop tightening stop easing monetary policy.
If Fed raise interest rate, maybe say in November, how would that impact Vietnam?
It is likely that Fed will increase the rate. Keeping in mind, United States will go into the presidential campaign next year. Before they go into the presidential campaign, President Biden and the Democratic Party make sure that they are keeping inflation in control. That is the major point that they show to the people, that we are successful in controlling the inflation, and the economy is still going on well with the lower unemployment rates. So they try everything during this year to keep the inflation lower and lower. That means they will continue to increase the interest rate until they achieve probably 3%, I would guess, or even better, 2.5%. 2%, I don't think that they are going to achieve this year, but at least 2.5% to 3%. If that's the case, then it's not good for Vietnam, because that will cause the foreign exchange rate go up to maybe 25,000 Vietnamese dong a dollar.
Well, once again, thank you so much for being here with us. According to experts, the State Bank's issuance of Treasury bills serves two purposes. Firstly, it absorbs market liquidity to reduce the pressure of exchange rate speculation by commercial banks in the short term. The amount absorbed is carefully balanced to stabilize the exchange rate without causing liquidity stress in the interbank market. Secondly, the State Bank will continue to implement policies aimed at reducing market interest rates and facilitating access to credit. These measures will provide a boost to the economy's recovery. And that concludes this edition of Bizline. Stay with us for more content or download our app VTV Go from App Store and Google Play for a lot more. Thank you for tuning in, and until next time.